My name is Andrew McKellar. I'm the Chief Executive Officer of the Australian Chamber of Commerce and Industry. It's our great pleasure to be hosting this morning's webinar and to have you all on board. Before we get underway, I do want to acknowledge the traditional custodians of the lands wherever you may be around Australia. I'm in Canberra, so here it is the Ngunnawal people who are the traditional owners, and we very much acknowledge their ongoing connection with the land, with community and culture in this region. So today's focus is on smart money and financial security. This is the next in the series of webinars that we're conducting as part of the Future Makers program. It's a great program. Its focus is very much on really the success stories, the opportunities that are there for women to start, own, operate their own business. We think it's a fantastic objective and one that is really vital to boosting the economic performance in the Australian economy. Today, we have a great panel, and it's going to be led in the discussion by my colleague, Heidi Cooper, who's the Chief Executive of Business Chamber Queensland. So without further ado, it's my pleasure to hand over to Heidi to take us through today's webinar. Heidi.
Thank you so much, Andrew, and thank you to the ACCI team and the whole of the Chamber of Commerce network. This Future Makers program is such a critical program to support women in business. We've already had a highly successful summit, which was attended by hundreds of women from around Australia to learn more about what it means to not only set up and establish your own business, but to also be sustainable going forward. And this is our second in the webinar series, which again has been really popular amongst both women founders of businesses, but also women business leaders. Today's topic is, in my mind, one of the most important ones. When we think about setting up our own business or running our own business, there are lots of things that people need to think about. But one of the things that we see that is often missed or not given enough priority is the money piece. And the reality is it's the most important bit. Lots of times we see people with great ideas, great initiative, great passion, great commitment, hard work, and putting in lots and lots of hours. But unless we get the pricing strategy right, unless we can value what it is that we do, and unless we can think about how it is that we're going to grow and finance the way that we do that in a sustainable way, sometimes it can be for nothing. So today's session is a really important one, and I'm so pleased to be joined with our expert panel, who I'll introduce shortly. But before I do, one of the things that I did want to talk about up front is today's session is intended to be a very practical session. So one of the things that we do at the Chamber Network is support businesses day to day. So we know exactly what it is that businesses are doing and exactly what it is that businesses need. So this webinar is going to go far beyond the concepts of theory. And what's really important is that it will provide practical guidance on some of those important issues that we know are critical for running your business, such as pricing, cash flow, and financial decision makers. It's really providing an opportunity for you to understand how to interpret some of that financial information, strengthen your financial foundations, and importantly, be more confident in what it is that you are doing from a financial perspective in running your business. Up front, I want to say there is no question that's off limits. You may think it's a silly question. You may think it's a question that doesn't apply to others, but I can guarantee that no matter what your question is, somebody else is thinking it. So let's think about how it is that we're going to look at questions after it is that we've been through the webinar, and particularly how it is that you can participate in this webinar. If you'd like to have live captions, please turn that on. You can do that by clicking the CC or Show Captions option on your Zoom screen. We will have a Q&A at the end of this session, and for you to be able to participate in that, you need to add your question via the chat option. Your question will then be read out, and the panelists will have an opportunity to respond to it. Please take some time, both during the webinar and while you're listening to the responses from our panelists, to think about what questions you would like to be asking. This is a golden opportunity for you to be able to seek advice and guidance from some of Australia's leading experts in this area. But one of the things I do want to stress that today's session is very much about general information only. It is not financial, legal, or professional advice. Everyone's situation is different. So if you need advice for your specific circumstances, it's important that you get your own qualified advice in relation to that. I will be reminding you of that again at the end of this session. Today's discussion will be invaluable, but it's very important that if you have a specific question related to your business or your financial circumstances, that you seek professional advice in relation to that. Now, it is my absolute pleasure to introduce the panelists that we have here with us today. Firstly, Ada Wang, who's the head of SMB at Intuit APAC. Ada leads small business strategy across the Asia Pacific region and supports SMEs to build financial confidence through smarter tools, automation, and data-driven decisions. Thank you for joining us today, Ada.
Thank you.
Sarah Parkinson, who's the CEO of Diverse Business Consultants. Sarah is a small business owner herself and consultant who works closely with SMEs to build strong financial foundations, drawing on hands-on real-world experience. Thank you for joining us today, Sarah.
Thank you.
And finally, and not least, because I've had the pleasure of being on a panel with this lady previously, we have Tish Van Wiegen. She's a chartered accountant and founder of InFinance Solutions. Tish is the founder of InFinance Solutions, which is an accounting and advisory firm supporting startups and small businesses with bookkeeping, tax, and CFO level advisory. With more than a decade of global financial experience across Australia, the United States, and South Africa, I can speak from experience that Tish brings a fantastic perspective to this discussion. So welcome, and welcome to everyone who is online today. Now, let's get started. The first area that I wanted to touch on is I really wanted to talk upfront about this idea of getting paid properly and really valuing your work. I was once told that it's possible to go broke on the beach, so don't go broke in business. And I think it's such an important thing to remember that we can have all the passion, we can have all the commitment, we can have all the drive, we can put in all the hours, but if we don't get paid properly, at the end of the day, the business isn't going to be successful. So Ada, I really wanted to start off with you from a pricing and strategy perspective. Now, you work really closely with SME business owners. What I wanted to understand is, can you talk through an example of where you've seen pricing strategy work really well and make a difference to a business? But can you also share as well where you've seen it not work and where potentially a business owner has fallen into a bit of a pitfall?
Yeah, great. Well, thank you very much, Hayley. And then I think, this is definitely something I see quite often with small business. I think I can give an example that I worked with a service-based business. So the business owner was incredibly well and then good at what she's doing, and she has created amazing service and with a great demand in the market. However, she hasn't really looked into her pricing for over years. So her pricing is actually based on what she felt is a reasonable price rather than what is sustainable for her business. So over the time, she was struggle with the profit margin. And then so when we had a close look of her numbers, and then I think even though the revenue looks healthy, but we discovered that her profit margin was really tight. And I think one thing also interesting, probably not surprise for everyone, is she hasn't been paying herself properly. And then I think that is the mistake a lot of small business owners probably doing. And then trying to save money for the business. And then so instead of like putting a broader pricing increase, I think it's very important to understand, like, what is the gap. So we actually took time to look at her numbers, understood her baseline cost of running this business, but also more importantly is to have that honest conversation on what is the design profit margin that could align with her business goal. And then also as well is to reevaluate her services and also the market positioning, because she shouldn't charge based on what other people charge in the market, but also instead it should be focused on what are the value she deliver for her clients. So I think with all this insight, this business owner was able to repackage her pricing and also be very intentionally on what to include in that pricing package. So as a result, over 6 months' time, we have seen a significant increase on the income, and which means it's a better cash flow and also a better margin for her to reinvest back to the business. And then I think what is even more important is through this exercise, she start building a more confident for herself as where she feel like she has the control for the business, and she can make a more intentional decisions. So I think when I look at some of the business, when it comes to this pricing question, the pricing is not just a number. So I think people should approach pricing as a strategy and a mindset. So I often ask our business owners on if your pricing, do you think your pricing can, support you to pay yourself properly, reinvest the business, and also still grow? If the answer is no, then I think that's probably something you need to reevaluate your pricing strategy and then to really shift the mindset from that cost-based structure to a value-based structure. So I think even just that mindset shift will help you to start unpack a lot of potentials.
That's really great. I love that idea around a pricing strategy. It's a really common mistake that we see all the time, which is revenue's great, but if you're not looking at that profit margin piece, and we often talk as well, that real ability to critically analyze either your products or your services and have some, I think you use the word, some really honest and hard conversations with you about where, like, what is costly to produce? Where is the margin? Where are you putting time and effort, but not necessarily getting the return for that? And the value piece is absolutely critical. And I think that's something that a lot of businesses, and to be frank, particularly female business owners really struggle, is to value what they are doing and to price it appropriately. So Sarah, I'd like to move to you if that's okay. I really wanted to understand a little bit more from your perspective. Like you obviously spend a lot of time looking at businesses' numbers and particularly from a bookkeeping perspective. What are some of the red flags that you see when you start to look at those, when you look at those financial papers and you look at the documents and you can start to see either a trend or a red flag that businesses should be looking at early to make sure that they don't end up in a situation where that profit margin just isn't there and they're actually, even though they might be working hard and getting the revenue, they just don't have the margins there.
Yes, absolutely. Well, the most classic sign, as Ada has touched on, is that the business owner and the business is flat out busy, but the reward is not reflecting the effort fundamentally. So I think small business is a tough space to be in, and it's a superpower to be across your numbers. So the first thing is to have accurate numbers that you can rely on and that you'll learn, if you don't already understand, you're learning to understand your numbers and building your confidence in that space. Fundamentally, it's going to depend on what business you're in and the industry you're in, but really the gross margin is critical, whether you're in a service-based business or a product-based business. So you really need to know your margin and understand the difference between markup and margin. That's fundamentally, a very common mistake or error that people may go through decades of business before fully understanding. So I think it's about having your financials set up in a fashion that gives you this information easily and that it's readily available. So the structure of your financial reports so that you can identify your gross margin or the key information that's driving your business. It might be wages as a percentage of sales or, whatever your key KPIs are. But similarly to what Ada said, you really need to understand the true cost of delivery for your product or your service. And it's not a gut feel or charging what your competitors are charging or what you're comfortable charging. So it's, truly understanding what your business needs to charge to be profitable and what that looks like as you scale. So, or if your intention is to scale, so that you've run scenarios at different sizes, sale volumes, different staffing levels. But fundamentally, the early warning signs are really looking at your margin and the margin trend in your financials, what you're making from the business, like your owner's drawings, or if you're on a salary, if that's truly reflective of the market rate for the role in the business, and ensuring that strong sales is equating to a stronger cash position over time.
That's great. Really, really strong advice there, Sarah. And I think that your point about having this visibility of numbers is absolutely critical. And I'd actually like to turn the conversation now to you, Tish, and particularly talk about it from a risk perspective. What do you see in the work that you do with small businesses when, if somebody is, flying financially blind, what are the risks, and how can you ensure that you don't end up in that position?
I think two of the biggest risks is one, it's a missed opportunity. So by not understanding your numbers, you don't have direction, and you could definitely miss out on opportunities, whether it's looking at your pricing strategies or new markets that you could enter. And the other one that I find, it's poor decision making. I work a lot with businesses looking at their financial statements, and I tend to refer to the revenue line as the vanity line and the profit line item as the sanity line. Because everybody wants to tell me, I'm making X amount of revenue, my business must be doing great, and they turn to profit and, but look, I have $100,000 profits, I must be running a good business. And they tend to forget about everything in between, like that gross profit margin, your operating costs, your direct costs. And it's really about drilling down into those numbers and understanding it. And I think that the problem actually comes with it, they don't have the intention to do that, but it is a bit of a psychological element. Running a business is hard work to start off with. Firstly, you're risking everything from a financial perspective to go off and start this business. But there's this fear that if I drill down too deeply into my numbers and I find out that this business is not performing the way I think or I would like it to be, it's also all of my hopes and dreams have just sort of evaporated. And so there becomes this mental block in terms of understanding their numbers. And I think what's important to remember, I always tell my clients, hey, you didn't get into business to be an accountant. That's why you come and see me. It is about having those open conversations with a trusted advisor, whether it be an accountant or a bookkeeper or a tax agent, and actually sitting down and understanding, because there's no problem that's too bad that we can't put a strategy in place to fix it. And some of the things that I see is year one of startup entities, they fail to plan for tax accordingly. You get to the end of the 12-month period, great, you've made a profit, but you also now have a tax liability that you didn't plan for from a cash flow perspective. And the mindset that we then fall into is, I'm just going to ignore that until the ATO sends me a DPN warning letter. Whereas if you saw an accountant or a tax agent and you put a strategy in place, you opened up that conversation with lenders, whether it's the ATO or banks, you can actually fix the problem. But I think, first it's just pushing past that mindset of I'm just going to ignore it and it's going to go away, because no, it's not going to go away. And then, just being open and honest with your advisors. We've seen it all from all types of businesses. There's no problem too terrible. And first and foremost, I'm here to help you. I, having started my own small business, know exactly how hard it is from the ground up. So I think once you understand that it's more of a peer group forum, we all want to help each other along the way. Just ask us the questions.
It's great advice, Tish. And I think that goes across the board for so many different specialists and experts that businesses can draw on. It's absolutely critical. When you're running your own business, you're busy doing a lot of things and you can't be everything. So it is good to be using those expertise of specialists. And we see it at the Chamber all the time. So there are state and territory chambers all throughout Australia. And if you go to your state chamber, we have a whole heap of services that most small businesses don't even know are available to them. We provide HR services, sustainability services, digital exporting services, and it just means you've got some support. It means you don't need to be relying on yourself to try and do everything. One of the things, I actually want to go back to the valuing piece before we move on to a couple more practical examples. And Ada, you mentioned about the importance of being able to understand how to value either your product and service. One of the comments you did make that particularly stuck in my mind is you don't necessarily need to charge the same price as your competitors. You need to be thinking about what your product and service is and how that fits into the market. Would you mind just talking a little bit more about that? Because I think that is a really hard piece for businesses. Particularly, well, actually, I think it is across the board, but if you've got a unique product or if you've got a service that's reliant more on IP or capability, how is it that businesses can think about that? And while you're talking about it, can you also maybe touch a little bit on the confidence piece? Because one of the things we know from the work that Aki did around looking at female business leaders is there's a real lack of confidence across the board in women business owners. And that
Yep.
plays out directly into the way they think about financial decisions because they don't value what it is that they're doing.
Yeah, I completely agree. And then I think to answer your first question about like this value, how do we really position our business in the market? I think if I would take a step back, the first thing I would really encourage everyone to start thinking about is to have a visibility, what Tish mentioned, like talk to your advisors to really understand where is your baseline. And then I think that's the baseline number one question that you need to really understand, have the visibility, understand how is your business doing. But then that's come to the second question is that how do you value your product? I think the first thing you will need to balance a few different factors. So the first factor you need to consider is your customer relationship and your market positioning, right? So how sensitive, pricing sensitive are your customer? Because the different sectors might have a different customer segment. They respond differently on the pricing change. But then understand that also is to go really deep on asking yourself, what are the problem I'm trying to solve for my clients? Rather than look at what a competitor is charging or what is my cost, but that is the value of where understood the true value you can deliver for your customer. And then the last piece is also how do you communicate that value to the customer? And then so that's not just from a simple pricing change, that's from every single touch point. When you communicate with your customer, you demonstrate this consistent value that deliver to your customer. And then that is the worth of your business. I think a lot of the business might think that the pricing increase is like a one-off, but no, that is a sustainable strategy decision on how you shift your business moving forward. And then I think that then go back to the second question. Now we see a lot of a business, especially female owners, are struggle to really make that tough call because I think that we all feel like we have a good customer relationship. We want to really, make sure everything runs smoothly. I think the shift have to start with really recognizing yourself as a business owner. You don't just run the business, right? You're also building your financial future, your financial independence as a female owner. And that is incredibly important for yourself. So we need to include ourselves into this financial equation for any decision you make along the way. So I guess paying yourself shouldn't happen just because we have some leftover money. So that should be your goal, your ambitions to say, I want to pay myself properly. I want to value my effort. And then I want to make a conscious decision for my business. And then I think once you start to really value yourself and then to start to saying that shift, and then I think a lot of those business decisions will start to transform as well.
That's great. Thank you, Ada. And Ada, you've commented on something similar to what Sarah spoke about as well, which is that one, obviously valuing yourself and ensuring that you have money that's sitting there, but also that idea that good financial management isn't just for businesses that are wanting to grow. We speak to businesses all the time who say, I actually just want to thrive as I am. And it's a really important distinction because we often hear businesses say, well, I don't want to grow, so I don't need to be doing this. I don't need to be looking for investors. And that's absolutely not the case, because to be a successful and sustainable business and to thrive as you are today, which is a very good financial and business decision to make, these are still steps that you put in place to maintain that sustainability. I'd like to actually go to Tish next. Tish, I think some of the areas that Ada was talking about that consistent and credible pricing, the customer engagement, that really goes to that financial credibility piece. I know you work a lot with businesses, and you and I have spoken about this a lot. If a business is looking at growth, if they're looking at investors, capital, whatever it might be, what are some of those signals that investors look to for that financial credibility of a business?
I think the first thing is if you are looking for investors or even just going out to get financing, the first thing is you really need to know your numbers. I've sat into a few meetings where we were talking to investors and we're having a few pitch decks. And it always comes down to, as a business owner, if I don't have an intimate understanding of my financials and my growth strategy, why do I expect somebody else to have confidence in me? And that's generally what the decision comes down to. So the first thing is, I would say, understand your current position really, really well. Know your numbers from your revenue to your profit to your cash flow. You need to be across all of that, because that's what's going to be building the confidence. The next thing is look at your growth strategy. Understand if you are speaking to an investor, how much of money it is do you actually need to achieve the growth that you want? Have a firm understanding of that. And I think be able to let the numbers speak to that as well, because I can spin up great stories about how I'm going to achieve growth, but unless my numbers are telling that story, I'm going to fail at that point. The other thing that I would encourage people to consider is really consider the business structure that you operate under when you are looking for financing, and also consider what kind of investor you do want to bring on board and what are you giving up for this investment. I think when we are sitting in the startup phase, and especially if you start from ground zero and build yourself up, there is that little bit of a confidence of like, oh, I should just take the money if someone's offering it to me, but really consider the reputation of the investor that you're bringing on board and what are you giving up in exchange for that money? How much of control of the business you are giving up? And I think one of the things that we really, and again, it goes back to the confidence issue, we need to remind ourselves we don't need to be giving up everything if we're bringing investors on board. They need to bring something more than just cash to my table. And I am seeing the model starting to change where people are looking for investors based on their reputation, based on, what markets can you help me penetrate? What advisory can you bring to my board? What other skill sets can I tap in through your network? I think it's very important to consider those measurements as well. And I'm going to revisit structure. I deal with a lot of startup entities, and my first question to them is, where do you want to take this business? If we were sitting here in 5 years, what do you envision? And a lot of them do talk to me about growth. I want to grow my customer base. I want to bring on employees. And I asked them the question of, okay, so what is your business structure? And it still surprises me how many businesses are sitting as a sole trader without understanding the risk that is associated to that. And some of the barriers is there's a lack of knowledge around understanding what business structures are in general. And two, there is also the financial investment. People seem to think that moving into a company structure is so much more expensive and complicated. So they just put it in the back burner and be like, once I'm making enough money and I can go and see an accountant or a lawyer, I can get that structure set up. But there's real ramifications to not getting your structure set up front the first time. So it might be a little bit of a cost investment to have someone review your structure, but what you're actually doing is setting up your business for longevity. So when you're taking that pathway to investors or looking for financing from some other third party, you have the foundations there.
Absolutely. And Tish, you and I have spoken about as well that, in those early stages, potentially when we're excited or hungry, or even at times we're desperate when we're running a business and you are looking for that financial support or partnership, it's so important to think about those things up front about what it is that you are giving away and what it is that you're getting, but that financial structure piece as well, because there are different ways to set things up that means that some of the core elements of your business don't necessarily go to risk. You're not giving up large amounts of ownership or control, and there are ways to manage through that. I'm going to come back to you, Tish, because I think there might be some people on this call saying, well, what if I don't have a growth strategy? What does that mean? So I'll come back to you to talk a little bit more about that in a moment. But I wanted to go to Sarah next. Sarah, there will be people sitting on this call now who are sitting there thinking, oh my gosh, I have so much already that I'm doing. How can I possibly do more? I'm running the business, running the HR, running the marketing. I take the phone calls at 11 o'clock at night when the security system goes off. Running a small business is, it's got a lot going on. How is it? What would your advice be? Because I know that you are so focused on working smarter, not harder. What are some really practical steps that a business could do, and a business owner particularly could do? Because when you are that small business owner, so much falls on you. What would your advice be about some practical steps and practical systems that businesses could use?
Well, this is my favorite topic, of course. Well, it needs to knowing your numbers and fundamentally having accurate finances and accounts you can rely on, I believe, is the most fundamentally important part of your business. So that needs to come first. But because, of course, most people, it's not their favorite topic or something that scares them, then it is something that they will get to or may not get to after they've solved the HR issue, looked after the customers, worked on the marketing, and it falls last. So my recommendation would be to set up a business as usual system for your finances and your bookkeeping and accounts. So it needs to be not something that you're doing once a quarter or once a year for some people, or once a month even. It needs to be a business as usual system so that you have the right financial information about your business at the right time. So there's a key difference between just looking at your bank account balance, which is basically a rear view mirror to what's happened, versus your revenue, your profit, and your cash position. So I think, of course, I'm going to recommend that you work with a bookkeeper or an accountant or an advisor, particularly if you're getting up and running and you don't know these things. Then sound advice and a partner to work with just makes the world of difference as you build your knowledge and your skills. So most people come into it from a different perspective, in that they've got low cash, they're trying to save money, they think, click, 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 zero's easy, or, I can do everything myself. But then you're kind of, you can end up in a mess and a position where you don't have accurate financial information, then you're overworked, you're working on the wrong things because you don't have the right financial data. So fundamentally, my recommendation is to get a system in place for the way that you approach your bookkeeping and your accounts. So once a week, you have, might be 30 minutes, or to stop and look at your financial performance and build on your financial acumen and your knowledge, work with your advisor, get your bills paid on a regular system, rather than just paying bills all over the shop when they come in irregularly. You're getting a systematic approach to your finances. And I think, like, starting simply with that, and you just continue to build on the approach over time. And, there's a big difference, obviously, between when you're a small business and just starting and setting something up, to then what, the approach you need to have when you have 10 staff and you're thinking about opening another location, or whether you acquire a business or offer a new service. But the foundation is the same. It needs to be a systematic, business as usual approach to your accounts.
Such great advice. And that idea of progressively just kind of biting off pieces to get to where you need to be. Sarah, can I ask you though, if someone was listening to this right now and they're feeling either a bit overwhelmed because things have got a bit out of control, or a bit intimidated, what's the thing you'd suggest doing right now?
If you're intimidated or it's out of control, I would reach out to an advisor. Like, we love this stuff. We love to help. And the most important thing is to have, you can't manage what you don't measure. So if you don't have the right information and you go and focus your energies elsewhere, you're not going to resolve the problem, and you'll keep, it'll just spiral. So I would get connected with a person that you feel comfortable with that can assist you. You can start small with a small, have a 1-hour consult or whatever it might be, and then continue to build on that. But shying away from it doesn't solve the problem. And sometimes it's just the fear of it. So once you break it down into practical, manageable steps, or, you start running a cash, like we break it down and look at your cash position, a cash flow, we look at some scenarios, or, get an accurate P&L, then a profit and loss, then it's not as scary as it was. Like, sometimes it's all about the mindset and the fear of the unknown. Once you have numbers to look at and work with, suddenly, the stress goes out of it.
Such great advice. So Tish, on the flip side of that, if there's someone listening to this saying, well, look, I've heard about this growth strategy, but I don't know what that is, or how to even start thinking about it. How do a business owner start thinking about a growth strategy? is it complex? Is it difficult? Is it one page? Is it, an idea? Is it like, can you help us to understand how do you think about a growth strategy?
I think a growth strategy is multifaceted. But before I delve into those details, just off the back of some of Sarah's comments and just some of the themes that have come through on this Future Maker Summit is the strongest theme that has been coming through to me is that we feel this immense pressure to be everything to everyone, and that includes in our business. And I always sit back and I'm like, but why do we have this pressure? Who's putting this pressure on us? And we're actually doing it to ourselves. One of the things, and this does tie into growth, is you can't be everything to everyone. It is simply not humanly possible. And the second thing that I always tell my clients is work your strengths and hire your weaknesses. Work out what it is that you're good at. Work out where your resources, your time is your most valuable resource in your business. Work out where that's going to be best spent. And I'll use an example of myself, right? Started up a business, worked in corporate, decided one day that's not for me. I can do better helping small businesses. So walked out, printed some business cards, had no clients, no websites, and was like, let's go do this. My weak point is IT and website development. And whilst everybody tells you, oh, you can do it yourself, I was like, it's going to frustrate me. It's going to take me probably 30 hours, and I'm not going to put out a great product. So I took the mindset, work my strength, hire my weakness. I got someone in to do that. That freed up my time to then look at what is my client acquisition going to be? What is my value pricing strategy? Because just because I'm an accountant doesn't mean I automatically know what to charge someone for a tax return if I don't have that prior history or experience. So work out where it is most valuable to spend your time in your business, and that's what's going to guide your growth. Of course, speak to advisors like accountants. I'm going to say tax agents as well, because tax is a very integral part of growth, understanding what those implications are, and then work out sort of, what are the pillars that are going to underpin the growth? Because growth isn't just one pillar that holds it all up. You need to have various pillars within your business that support your growth. And if one is weak, it can actually cause your entire strategy to fall down. So time, biggest resource in your business, spend it wisely. That will underpin your growth. Get a good set of advisors, whether it's legal, accounting, tech. I cannot impress how important tech advisors are in your business just because of what we've seen happen in the market. This is the biggest shift in technology that we've seen in decades. You need to be on top of that. So work those things out for your company. And then obviously you need to connect that to my cash flow forecast, my budgets. And the next thing I'm going to say about that, I also deal with businesses that come to me and they're like, I've done a cash flow forecast, I've got a budget, I've got everything, I'm ready to go and apply for that loan, I'm ready to hit my growth, my growth stride. And I'm like, but how often did you actually compare that to your actuals and reforecast and revisit that budget? Because the world that we live in is constantly changing, from tech issues to environmental issues. We need to readjust those things to then set us. It's not about just having a budget for the sake of having a budget. My budget's going to tell me my revenue is going to double in 2 years, and I'm going to achieve that. So it's constant work, it's constant strategizing, it's revisiting, it's changing. It's the ability to be agile.
So good. Thank you, Tish. And one of the things I would add to that idea of, I love work your strengths, hire your weaknesses. And even if it's not necessarily a weakness, if it's just something you can get some help with, I know one of the things you and I have spoken about before, Tish, is not everyone understands your great idea or your business, and that comes from customers and from investors as well. So we often see businesses who come into the chamber and they say, I've got this great idea, and they sort of flap their hands around and talk about things. And we say, look, get some help around your communication, or get some help around your marketing or your website or whatever it might be. So I think that point about, if you need some support in a particular area, you don't have to be the expert in it. You can get some expertise, but those expertise will be critical in helping you to be able to build your business going forward. Now, I'm going to ask Ada one more question, and then I'm going to turn over to Q&A. And Ada, what I'd like to talk with you about is the resilience of businesses, and what are some of the key things that you see which are common factors in resilient businesses. We know that the world generally is becoming more and more complex, and there's a lot of different shocks to the system, but also even some of the things that Tish was just commenting on around the fact that tech's moving so fast, customers' expectations are moving. There's a lot for businesses to be thinking about. What do you see as common factors that make businesses resilient compared to being vulnerable?
Yeah, that's a great question. And then I think if I think about the business I have seen being a resilient business, not necessarily means that they have a less challenge. They also facing the same challenge, uncertainties that everything that every business went through. But what I have seen the resilient business standing out is how they're prepared to respond to these uncertainties or the changes. And I think if I can think about some of the key fundamentals where I see the first one is back to what we discussed is to have that financial visibilities, especially when it's come to like operating on the uncertainties in the current environment. I think even just to have that simple visibility of your cash flow in the coming months and knowing what exactly your business is doing. And that will enable the business to actually respond earlier rather than respond based on urgent situation. And also, a lot of a business also start to now thinking more strategically when they're building their business model. So they are adding a lot more flexibilities over time to their business model. So whether it's related to a pricing structure or it's the service or product you delivered, so they have that mindset on if they would like to build a business, they want the business to be more agile and also adapted to the change. And also, I think some business also are building some buffers over time. So even something to start small, like putting some money aside, where it's always helpful when you have some financial cushions when all these unexpected situations or disruptions happen. So that will enable you to pivot more quickly. And I think then the last piece, which is very important, is Tish mentioned like the tech space are evolving so much right now. There's a lot of tools available where you can leverage to help you managing that business process. But what is really important is that a lot of business, they are looking at the tools where you can have essential data all into one place and also have this AI insight to help you make more intelligent decisions and at the right time. So I think that if you're able to have more visibilities on your business, understand what's going on, and have an integrated tool where it can give you the financial visibility plus customer insight. So then you know how to make a business decision when things become challenging and you're not making a decision just based on how things are feeling, but you're making a decision on a data-driven insight from those systems and tools. And then also plan ahead to thinking of what if the situation are continue being a challenge or stressful in the next few months, how would you make a plan differently? So that are some of the characteristics where I see the resilient business have overcome and become stronger over time.
That's fantastic. And there's so much commonality between success and growth and also resilience through difficult times. And it comes back to the visibility of your data, your financial position, and the ability to make decisions based on evidence. Entrepreneurs set up businesses and that's what makes them amazing because they often see an opportunity and do a lot on gut and instinct, which is fantastic. But in order to have that successful business going forward, that data-driven decision is critical. I'm going to hand over to SK now. I can see that we've got some questions coming on through the Q&A. Would you like to let us know what we're hearing from the audience?
Yes, thank you so much. The first question we have is, can you outline the difference between margin and markup, please?
Okay, so I think that was something you talked about, wasn't it, Sarah? Is that something that you'd like to jump into?
Yes, broadly, because I think that it would probably be best to have it demonstrated to you or to look at a visual as you're learning this concept. But there is a difference between, so the markup is the multiplier that you would, if you were buying your product for $1 and selling it for $2, then you've marked it up 100%. And then the margin is what is left. Once you've got your sale price less your cost price, then you've got your margin. So sometimes people think that they are the same number, And it's very important to understand that there is a difference. So you need a much higher markup to drive a higher margin. And so I would recommend doing some Google searching. There are some visuals to demonstrate different markups and what impact it has on your margin. And just make sure you have a good understanding of what margin you need to hit in your industry or with your product, or what the general benchmark is, and also therefore what markup you need to apply in that scenario.
Thanks, Sarah. No, that's really helpful. And it's something that we're seeing a lot of businesses struggling with at the moment. The Chambers of Commerce do a lot of work with businesses across Australia, and we also do regular pulse surveys. And what we've actually seen is the margin or the profitability of a business has been becoming smaller and smaller across all industries. And the reason for that is, even though prices have been increasing, which we've seen across multiple industries, the cost base is becoming so high for so many businesses across so many areas. We saw that in wages, we've seen it in compliance costs, we've seen it in supply and transport costs. And so what that means is that businesses are reporting that their margins have become smaller and tighter, which puts the business at greater risk. SK, the next question.
Sure. So, how do you think the operation of a business will change over the next 5 years? Will we see financial frameworks change that will evolve the thinking we have discussed today?
Tish, is that something you'd like to jump into? I know I've heard you talk about this before.
I don't think I don't think what's happening in the market is going to change the way we discussed concepts like cash flow, visibility in your business, taking accountability for your finances. I think those concepts are always going to remain important. I think what is going to shift in the market is how do we get to those numbers? And for me, that huge drive is coming through technology at the moment. How I'm delivering, if I look at myself personally, how I'm delivering services to my clients and where I'm spending my time is certainly shifting, but I'm still spending a lot of my time talking about business structures. I'm still spending a lot of my time talking about cash flow, budgets, profitability, etc., understanding the numbers. At the end of the day, I do see a lot of a lot of my clients come to me and they do run things through ChatGPT. And I think our instinct is sometimes to kind of like push back on, but you came to see me as an advisor. One of the things that I do, remind people is, yes, you can put a question through ChatGPT and come to me armed with an answer, but you are coming to me because you still want to fully understand. You want that human touch. So I think there will be a lot of shifts in the market, but ultimately our objectives are still going to stay the same.
Fantastic. And Ada, I'd love you to jump in because you've got that whole Southeast Asia Pacific visibility as well. What are you seeing with markets?
Yeah, I think I agree what Tish shared. And then I think fundamentally the principles on how we run business will not change. And then I think that is something that we have to, deeply embed it ourselves to develop that capabilities, like the understand those principles on how we run business. But what we see significantly shift is the speed to market, is the way how people improve their workflow and the innovations from tech space that happen every day. And even just to speaking of on behalf of Intuit, like we now have a platform where you can see the customer financial data and the customer insight and the behavior insight all in one place. And that just happens so quickly. And there's also other tools available in the market. I think really for us to get ahead of the game is to really know the fundamental will not change, but you need to be open-minded to all these new technologies now coming to the market.
Yeah, and we definitely see that. We're obviously part of an international Chamber of Commerce network, and we see that quite considerably. And Ada, your comment about the speed to market and how quickly competitors can move, particularly when you see what's happening in the US and some of the other markets, they're utilizing technology to be able to move quickly. And to your point earlier about having a business model that enables that flexibility is really important. SK, another question, please.
Sure. I would like to know about what are 3 key practices a business owner can put in place to better manage their cash flow.
Sarah, that feels like that might be one for you again.
Yes. Well, the first thing would be having your accounts accurate and up to date weekly or regularly. And then so you would be putting in place your, profit and loss balance sheet reporting, and then moving into a forecasting position. So you should have a 30, 60, 90-day cash flow forecast at least. So we stop looking in the rear view mirror and we start looking forward and projecting your cash flow so that you have confidence in where the business is heading, and that you're going to have the cash to fund that. And I think, as Tish touched on earlier, like once you have a budget and a cash flow in place, it's like continuing to revisit it. And I'm all about setting up the systems to make yourself or the business do this. And so in our case, often that's engaging with a bookkeeper or having an external consultant that you're meeting with regularly, which makes you stop, look at, and understand the numbers. But really, you need these multiple financial reports working for you, and to move from looking in arrears to looking forwards into the future.
Fantastic. Thank you. SK.
Oh, I think Tish had her hand up.
Oh, sorry. Did you? Sorry.
Yes, I
apologize.
did. I just wanted to add to what Sarah said. I mean, for me, just like a really quick win that you can implement today. The biggest problem I see with small business owners is not understanding their obligations. I touched on this revenue vanity concept that we have. It's vain. We're making X amount of profit. We touched on profit sanity. The biggest mistake people make is thinking everything in their cash account, everything that's been banked, is their money that's left over for them to spend. And so we see them then making financial decisions and overspending and not realizing they have super obligations, they have BAS obligations, they have income tax obligations. The best thing that you can do to manage your cash flow today in a very simple manner: 3 accounts: a trading account, a tax account, and a savings account. As soon as you run your BAS or look at your BAS on a monthly basis, there's accounting software that's going to give you like a 99% accurate number. Move that into a separate bank account called a tax savings account. Sit down with your accountant once a quarter when they're doing your BAS, understand your income tax estimate, move that into your tax savings account. You know what you're going to have to pay in super the moment you run your wages, and that's going to be removed with payday super coming in soon in July. But move that superannuation into a separate bank account, and then what's left in your trading account is actually going to be your retained earnings that you can reinvest or save. Move a portion of that into your savings account. Very simple. It takes minimal time to understand these numbers. If you're sitting with your accountant, the accounting software can also give you these numbers. It'll take about 10 minutes once a month to do that, and it will improve your cash flow strategy.
And if I can just add too, I completely agree. Great concept. It's like once you are receiving your numbers and you have this accurate information, it's like making sure you have a full and complete understanding of what you're looking at. And you won't initially, but be brave enough to ask stupid questions, like keep learning about what you're looking at in your finances, and then your bookkeeper, accountant, or advisor will help you to continue to build on your knowledge. Like, it's your business, your financial reporting, and you should understand what's in it entirely, from your accounts receivable balance and your revenue. You need to make sure that you know what you're looking at, and that doesn't happen overnight, but it's a journey from when you're starting up to as you scale and grow.
Fantastic. Thank you. SK, next question, please.
This one says, I haven't started my business yet. I've got an idea, but how am I supposed to figure out what to charge? If it's not what my competitors charge and it's not what I feel comfortable with, what is it? Do I need to do a course before I start?
Ada, I feel like this is a great one for you to jump into.
Great. Well, I think it's always come from a value, a customer problem. So what the service that you're trying to deliver to the customer, or what product you're trying to sell, like this business idea is a concept, that's great. But I think we need to validate this business idea now by talking to a customer. So you need to know that at this design phase, the we need to at least to get a validation from a customer feedback. So you can talk to friends about this business idea, and then also to get some feedback from a real customer first before you just to make assumption to say this is what the pricing I should charge. So I think the first thing is always get to know your customer. And then when you're trying to define the pricing strategy, as we said, it's based on the value that you deliver. So then ask yourself what the problem I'm trying to solve. And then we're looking at all the other competitors who offering the same service or selling the same product, like what is my point of a difference? Like what is the value I'm adding that no one else can add into the customer? And then I think that is your baseline for you to be able to think something outside of the box rather than just look at the similar product or similar service on the market to define what's your starting point. But I will say the first thing is always to get to know your customer. The second is get to know what problem you're trying to solve.
That's such great advice. Thank you, Ada. And I think it's also really important just to sort of clarify the context of that question. It's not that you don't look at what your competitors are doing, and it's not your gut instinct on what it is that you think. They're contributing factors to making the decision. I think the comments that were made by the panelists is it's not the only part of your decision. And as Ada has said, the first thing you need to look at is what it is that you're doing. Know your customer, what your value is, and think of it from that perspective first. Then add the other data points, which is who are your competitors? Where is there a gap in the market? Do you have any other barriers that are different to other competitors? For example, you might have greater transport or to get your product to market. You need to look at all of those factors. But the point that was being made by the panelists earlier is that it's not as simple as saying, well, my competitor charges this, and so therefore I should charge this. It's a contributor to the overall consideration of your value. And the first piece needs to be about what's your product, understanding your market and your customer. Thank you, Ada. Let's try and get one more in, SK, if that's possible.
Of course. So how do you evaluate whether an advisor is any good or not?
Oh, great question. And I might just start off by saying that one of the things that is so important when you are considering advice is actually referrals. And it's really important to have a network of business owners around you. Again, I'd really encourage everyone on this call to join their state or territory chamber of commerce, because we have very large networks and networking events, which means that you'll find businesses either like yours or in similar areas or jurisdictions, or and you can get you can get different pieces of not so much advice, but definitely recommendations. But I'll just throw this out. If anyone wants to jump in, we've got about a minute left. How do you know if you've got a good advisor?
I say speak to your peer group. If someone is good at the job, your peer group will let you know. Especially within small business communities, we want to help each other out. So when we come across a great service, we want to refer them. I do see people make the mistake of sort of going all in with their advisors, committing to large amounts of fees, and they're not getting service delivery. I would say break it down into bite sizes of what you actually need. And like when you go for an employment, you have a probationary period, a trial run. Give them a really small task, manageable, and see how they perform in that. And definitely assess performance in anything that we do. At any point in time, if the performance is not there, be confident in the contract as well to say, well, I can terminate this and move on if I need to be without significant financial ramification.
It needs to feel good. I think when you find the right advisor and it feel like if you're not questioning the value and it feels good in that they are speaking in layman's language you can understand, they're giving you the right information, they're responsive. There's all of these dynamics which would be unique to you and the way that you work. And so referrals are certainly a key driver and a great place to start. But also, I just feel that you need to feel like you're getting good value from the relationship. And that's when you know that you're working with the right people for you.
Fantastic. I'm super conscious of everyone's time. We're all busy business people. I'm just going to very quickly try and cover off a couple of these questions and just point into the right direction. We've just got one still on margin. Now, I think Sarah covered that off. So please go into some of the advice areas that Sarah covered. There's a question here about payday super. We've only briefly touched on super. This is really, really important. If you need information about this, your Chambers of Commerce can support you. So depending on what state or territory you're in, please contact your Chamber of Commerce. The changes are coming from 1 July and they are going to have a big impact about how it is that you pay out your super from a timely perspective. So please do try and get some information on that. We've got one question here that says, I'm rubbish at maths. I thought about starting a business, but will this be a limitation? I think the short answer is absolutely no. You should definitely jump in and give your business a go. But as Tish said, work your strengths and hire your weaknesses. So if you need someone to support you with the numbers, get someone to help you with that. And then the final question here is do you have clients coming in freaking about the cost of fuel? If so, what are you telling them? We, as a chamber network, are doing a lot of work in this area. This webinar hasn't been specifically focused on it, but again, if you go to your either the ACCI website or your state or territory chamber, you'll see a lot of information on this. We ourselves in Queensland are seeing more than 75% of businesses being impacted by the fuel crisis and from a cost perspective, and we have some information about that. I know that ACCI, other states and territories also are doing the same thing. This is a really challenging time, and for the person who's put up that question, if you're needing some support around that, please reach out to your chamber. I'm very conscious that we've hit our time, and I know that everyone is very busy. Appreciate you taking the time to join this really important series. As we spoke about at the beginning, Future Makers is an initiative of the Australian Chambers of Commerce right across Australia. We're all part of ensuring that businesses can thrive into the future, and particularly small businesses and those owned by women. There are more webinars coming up, so please keep an eye out for them. I do want to reiterate the comments that I made at the beginning, that the conversation that we've had today has been a general conversation. It is not a specific conversation. There are so many helpful tips that have been provided by our experts. But if there is something specific that you need, then please reach out to a professional who can help you with the specifics of your business. And importantly, I hope that today has provided you with some helpful guidance. For those of you who might be feeling a little bit intimidated or overwhelmed, or for the person who is worried about not being good at maths, the biggest thing I could encourage you to do, and particularly any women business owners on this call, running and owning your own business is one of the most wonderful things you can do. It's one of the most fulfilling things that you can do. We want to see more women in business. There is a lot of support for business owners. Please take up that support, and please continue to engage with us as we continue to provide the Future Makers series for business owners just like you. Chambers of Commerce, our sole purpose is to ensure that businesses can thrive, and this is just one of the ways that we're doing it. Thank you again to our panelists. You've been absolutely incredible, and thank you to each and every one of you online who runs a business every day. Thank you.